What's going on, guys? It's Louis here, bringing you today's cryptocurrency video. We're going to be taking a look at Firo today. So first of all, we're going to start with the weekly time frame. And what is positive about this dip is you've come back to test the weekly 20 moving average, which you haven't done since the 18th of October. So this is the first time we've done it since then. You can see we were consolidating, but we weren't tapping it. And now we've got a tap of it. Now, guys, we do want this to hold because, as we know, when you lose the 55 on the weekly, that's your signal for the bear market. But losing it doesn't mean anything. You need to back test it as resistance. You see, you lost it here, you got back above. You lost it here, you got back above. You lost it here, you got back above. So as long as you don't hit your head on it, like here, so hitting your head, bear market, bear market, bear market. And then that's where we started the bull market. We've had the weekly bullish cross. And then since then, we've had many scares along the way. But even though it looks scary on the charts right now, especially for Bitcoin and ETH and whatnot, like Firo has been holding up nicely. But we do know that it's lagged in both directions. So obviously, it could carry on going down, but we're going to go into further detail on that in a second. So make sure you like this video, turn on the notification bells on Twitter and on my YouTube. The Twitter link is in the description down below. And yeah, subscribe and comment down below what altcoin you want to see next. I'm going to try and bring out a few videos today on bearish targets for this dip. And of course, a lot of people are like, Louis, is it the bear market? It's not the bear market. Again, I've just explained what is the bear market. We have to lose the 55. You have to come back to test it as resistance. And only then, when you fail, keep hitting your head on the resistance. That's your bear market. Let me see. Yeah, here. That's your first tap of the resistance, and you carry on down. So let's take a look at the daily. Again, positive that we've come back to the weekly 20 EMA. So I'm going to turn on the drawings now to show you the levels. In my first Firo video, I told you guys that if we want to stay in a bull market, we must stay above $5, and we are staying above $5, so everything's perfect right now, guys. Must reiterate that. So obviously in the last few days, you lost the 20 moving average, and what this means is that you're going to come to the 55, and this is the area that we want to see hold. However, if you do lose the 55, this orange one, you will come down to the 200, this white one over here, and you see we've just come a bit short of it. Now this is fine, guys, because as you can see here, when you lost your 20, your 55 was down here, but look where the 200 was. You didn't even test the 200, not even hit, but you still went up. This is the beauty of the 200 moving average. You don't need to touch it, but if you do, it's even more bullish. Like if you're respecting it, touch it, fail to go below, just like this. Like you went below, but failed to close below. That's very bullish. But all this moving average is telling you guys is if we're above this moving average, you should be looking for buys. And if you're below it, you should be looking for sells. You don't need to touch it. You just need to look for dips or pullbacks before entering. So this is a massive pullback towards it. Yes, you haven't touched it, but that's completely fine. So what does this mean? We could come down to it, we may not. What I'm seeing on the daily time frame is that we've turned this swing high here into a swing low, and we did that over here. And I actually gave, when we were somewhere up here, I gave you $8.20 as a bottom, and we were holding that very nicely. But the fact is, guys, that the more times you hit a support or resistance, the weaker it gets. And eventually we hit it too many times that we broke it, basically. And over here, before we dumped down under here, where we had this wick, I did tell you guys that if we were to ever break below this zone, we will hold $7.70. You can go back to one of my first Firo videos. I did say that. So yeah, the daily, that's the daily. Now we'll move to the 4-hour time frame. So I'm going to zoom out. I've taken away loads of levels. I just redid my charts yesterday, basically, but keeping in the major key levels that I did have from the original videos, which is $8.20 over here and this line over here. Because I was telling you that the swing highs become swing lows, and that's why this became support, but you hit it too many times. So you come to this swing high over here, and look at that right now. I know this is an open candle. Anything can happen in the next 2 minutes, but if it closes as it is, you're holding this key level as support. Now, guys, if we do lose this level, which we did during that candle, there are other levels that we need to watch out for Firo, and that is the next swing high. So if you lose this, you're coming to here, because this swing high, as you can see, when we broke, let's zoom in for you guys. So can you see here, we've pumped up, we made a new swing high, you come down before making a new swing high. And what you've done after that is you come back to find a new swing low, and that sat on the previous swing high, and then you continued, okay? And then you're meant to come down and hold this level, but you lost it, so that means you come down to here. But if you lose that as well, you come to this. Boom. That is how trading works. It's all about swing highs and swing lows. And that's why a lot of the time when we're in consolidation zones like this, I turn off my moving averages. So we really don't need them right now on the 4 hour, because obviously we were consolidating. All we have done is formed a bearish cross here, which is just a confirmation statement of a downtrend. So I'm going to remove the indicators right now, because we know it's a downtrend. We don't need the moving averages to tell us that. And when you take off the moving averages, it does make the chart clearer, so you can see price action for what it truly is. So we have this swing high, you made it into swing low, and then we went off, and then we used this swing high as swing low, lost that, come to this one, but then during this candle you lost it, and you come to this one, and you've held that. Can you see resistance, resistance, and now you've held that as support, which is bullish, guys, okay? Now with wicks like these, it's highly likely that you come to fill them in, but it doesn't have to happen all the time. So you see this wick here got filled, this wick got filled, this wick got filled. So it's highly likely that they will look, this wick to the upside got filled, but it doesn't have to happen like exactly over here. It didn't happen. So I do want to see more price action in this zone, because you will not, I really highly doubt that you'll just pump up from here. We're going to go sideways, maybe form a double bottom, get back above. It's going to be slow and gradual, guys. It's going to be painful the next few days. Like what is happening with Moonvember, you know what I mean? Look, November, start of November, where are we now? Dumpvember, more like. Too funny. So yeah, we know the levels that we need to hold out for. If we lose this green zone of 770, we're going to come down to in and around 745 to 735. Guys, if you lose this, I would say the worst case scenario is this zone, and we do not want to lose this zone, because after that it's free fall to this zone down here, and this is the zone where I said you must hold above this zone of $5, the $5 zone, okay, not just $5 exactly, the $5 zone, so from $5 to $6 basically. So you must hold the $5 zone, because if you lose that, that is your bear market. Simple as that, guys. So as long as you're above that, you're in a bull market. Simple as that, guys. So literally no worries right now. You can come down all the way to here. You could even come down to 6, but as long as you're not losing 6 and losing the 5 level, the $5 zone, then we're bullish, guys. Because at the moment, if we're looking at the macro scale, you got a high, you got a low, you got a higher high, and you still got a higher low, because that is still higher than this. Can you see that? So on the macro scale, we're all good. Gucci Mane. But yeah, one thing that we were talking about maybe a week ago or two was that this could have been potential descending triangle, but I wasn't certain that it would have been. I was expecting a break to the upside. So yes, this is ugly. Look where that takes us. That takes us to $4.86, and we do not want to see that at all, guys, okay? That's when I've become bearish, to be honest. So you are in a technical target too there, but just because you're in a technical target, I must reiterate this, because a lot of people are like, Louis, you said this and then it didn't go there. How can I trust you? Guys, when you have a technical target, they can be invalidated. It don't matter if it's the target. I need to keep saying this. It doesn't matter that we're now on a target to 486. This can be invalidated, just like any pattern. WM, head and shoulders, inverse head and shoulders, flag patterns, any pattern you can think of can be invalidated if you break back above the neckline. So the neckline right now is $8. So what we want to see is us break above $8. And it doesn't matter. You could literally, like, the target is what, 485. You could literally come all the way down to 5. You could come to 6. And you could still go all the way back up, invalidating the target. There's not a level where it's like, oh, yeah, basically any pattern can be invalidated. You just need to break back above the neckline. It can go as far down, let's say the target's 485. It could go down to 490, and then the pattern can still be invalidated if from 490 it gets back to $8. Do you understand what I mean, guys? So you must remember this when I'm talking about patterns, okay? Sorry about the rant. But yeah, looking at a closer look, I'm going to put the fibs on right now. So this was our Evergrande dip. So I'm going to measure from the bottom of that dip here and look at the fibs. Perfect, guys. So, wow, amazing. Because basically, when you lose your lower here of 1, your target is the 1618. However, you've come short of it, which is nice at the moment, but it does mean that we could still come back down to it. But you invalidate this. Remember that, guys. Any pattern can be invalidated. That means the fibs too. this can be invalidated if you get above this, the 1, okay? And then you won't dip anymore. So please remember this, guys. Take notes, because I've had enough of them people getting on my nerves. So yeah, you're still in a target to this, $7.42. But if you get above $7.95, you're not going to $7.42. Worst case scenario, if we lose the 1618, look at that for confluence. Where is the 1618? On that swing high, which also became a swing low over here. So swing high. And remember, if we lose this, where do we go? We go to the swing low. And look at that for confluence. This is your super overextended target of the fibs, the 2.272. This is like the most you'll go, basically, before having a fat retracement. So look, the 2.272 is at $6.90. So basically, you don't want to lose $7. But remember, this here does not have to happen if you get back above this, okay? Same as if you lose the 1618, it doesn't automatically mean you're going there. Yes, once you lose the 1618, the 2.27 is your target. However, if you do this and get above the 1618, this over here is invalidated, guys. Please take notes of this, because again, I've had enough of people chatting shit about my TA, because I know what I'm doing. I've been doing it for over 3 years now, and I wouldn't have the money I have today if I didn't know what I was doing. Do you know what I mean, guys? So yeah, we're back above the 1.272, which is bullish, because you come down, you lost the 1414, you didn't come to the 1618, you got back above the 1414, and you got back above the 1.272, and look where you've closed now, this 4-hour candle 5 minutes ago, above this green line, which is your previous swing high, which I gave you literally in this video, my first Firo video over here. I said if we were to ever lose 820, this is where you come down to, and then you wick down to there, got back above, and then you filled in that wick now of the bodies. So this literally could be the end of the dip, and all we need for confirmation that this is the end of the dip is to get a back above $7.95. If you fail to get above $7.95, I would expect for us to go to the 1618 at 7.42. Now, if you break below this and you confirm it as resistance, this down here, the 2.272, is your target at $6.91. But again, guys, you could come all the way down to this box and not meet this target if you were to get back above this 1618. Just like what's happening here. At the moment, you're in a target to the 1618, but if you get back above the 1 at $7.95, you will not go down there. Perfect, guys. I hope you enjoyed today's thorough Firo update. Share this with everyone. Please, guys, we need to get my channel out there, because so many YouTubers and Twitter pages are not talking at all during this dip. It's fucking ridiculous. When you need them the most, they're not there. They vanish. So I hope you enjoyed today's update. Please like, subscribe, turn the notification bells on. I'm almost at 300 followers on Twitter, and I think I'm 5 subscribers from 400 subscribers. Perfect, guys. I'll catch you in the next one. Peace.